Good afternoon, traders. This is a live trade recap. I took 2 trades this morning right at the market open. It really should have just been 1 trade. I'll show you what happened on that first trade. It wasn't the second trade that was wrong. It was the first trade. I took the entry in error, not intentionally. I'll show you exactly what happened in the video. You don't really have to take my word for it. It's pretty clear what went on in the video, so I'll point that out for you in just a moment. Let's take a look at the screener. I'd like to show you how I pick my stocks. So as always, I click on my screeners and I use my mid-cap stocks. Make sure to click those 3 dots and click modify, otherwise your filters will not be applied. Then this is my filter criteria. I organize the list by volume. Then I look for the stocks that are trading up, and they also must meet my chart criteria. So my screener and chart criteria are all written out in detail in my trading plan, which is available on patreon.com/tradingarmor if you'd like to know more about that stuff. So let's take a look at the video and we can see the trades and what I put on my chart. So here is, let's see, I start out on the daily chart checking the stocks. CHPT does not meet the daily chart criteria, so that one gets ignored. GSM does meet the daily chart criteria. Then I move my yellow line up to the previous high, and I need to see the price break over that in order to take an entry, so that's what that yellow line means. And if the chart doesn't get a yellow line like you saw on CHPT, I believe it was still up there, but there's no yellow line, so there's no way I could possibly mistakenly take an entry on that. And then I just went back to the screener, looked for something else, and replaced it. And that something else was MARA. That was looking good on the screener and also on the chart. It was trading above the 200 MA on the daily chart, and now here's my yellow line marking out that this is the previous high, and you could clearly see that the price has broken out through the previous high. So now I just need to wait for a pullback, and I always enter on the first pullback of so after the price hits a new high, and whatever the first pullback is, sometimes it's 1-2 candles, maybe more, you never know. I always take the very first entry after that, and at the end of this test trading, we're going to talk about whether or not I should be taking that entry, but that's what the plan is for now, and we're already 90 trades into this, so it's not going to change. I'm not going to change it for the last 10 trades, otherwise it will screw up the data. So now I'm just waiting for a 1-minute candle to make a new high. And it was taking kind of a long time for this trade to give an entry, and I was thinking there is a possibility that the price might come down and fall below that point A. Even though at this point, I mean, I was already pretty much committed to MARA. I have I have a few other stocks up here, but I had decided, once I saw this really strong pattern, that this one should be the one that I take the trade on. But of course, if the price comes down and breaks below point A, then I can't take a trade on it. So when I saw it getting really low, I looked back to the screener. I saw something else up there that I pulled up, and that may have really what led to my error on the first entry, because I was somewhat distracted now, because now I'm watching MARA and I'm checking this one out as well. So I probably would, I almost guarantee that I would not have made that error trade if I didn't do that. So that may be something to consider to add into the plan. If once I commit to a stock, just stick with it. If it comes down and it fails that ABCD pattern, then I just stop trading for the day and take a break-even day. Instead, I was trying to see if this one fails, maybe there's something else I can trade. And again, that's like kind of another subtle form of FOMO, that, if this one doesn't work out, I'm going to miss out on something else. And generally that leads to some bad situation, and that's what happened today, is it caused me to take a trade in error. So let's take a look at what happened. So here is the candle. I believe this is the candle that I entered on. So right now I'm hovering over this candle, and the high is, let's just make sure before I get too far. Yeah, so that's the one that I entered on. So here's what happened. I'm hovering over this candle. I see the high is 43.65. So my price that will trigger my entry is 43.66. But for whatever reason, again, I'm blaming myself for putting this stock up and distracting myself. I'm looking this way and then looking back over here. And when I looked back over here, I saw that the price broke above the top of this candle. Here it comes right there. And then I thought, okay, I've been triggered to take a trade, but that didn't really happen because I'm blocking the wick of this candle by hovering over it, which normally is not an issue. I mean, and this has never ever happened. And I've done this plan. I've traded this plan 90 times now, 90 different trades. I've never made this mistake. And this also goes to show you how, no matter how good you get at a plan, and don't think you're that good, because then something like this happens. There's always some new mistake that you could possibly make. And this is the risk of day trading. So many factors involved and so many unknowns. The only thing you could do is, as you make those new mistakes, you write them into your plan and remind yourself so that you don't make them again. And believe me, this will go into the day trading plan. So what happened there is I took an entry too early. I never would have gotten triggered to take this entry had I not, or had I followed my plan 100%. But again, I accidentally, inadvertently broke the plan here, because if you look at these candles right now while I'm hovering over this one, it looks like this one broke above this candle, but it did not. It only broke above where it opened. There, now you can see. I was hiding that wick accidentally, and you could see that this is basically a double top formation. They both have the exact same high, 43.65. Therefore, I was never triggered to take an entry there. So this trade is completely in error. It does count. It's going to go on my spreadsheet as trade number 1, but in a lot of ways it shouldn't. And this is why I also track my trades that I call non-error trades, right? So the next trade that you're going to see me take is actually trade number 1 without error, if that makes any sense. So anyway, let's just watch this trade, see what happens. I'm not expecting this trade to work out. I did not get triggered on it, and I'm in it by mistake. But once I'm in a trade, I don't continue to break rules by saying, well, let me just get out. My plan and my strategy says that no matter what, once I'm in a trade, I have to see it to 2R or get stopped out at minus 1R. Simple as that. So that's what I do. There's always a chance that this could still work out, and that's happened before. I've taken error trades that worked out. They don't count toward my winning percentage when I'm looking at my non-error trades. But so anyway, the idea is just to stick to the plan. Like, once you have made a mistake, don't continue messing up by rewriting the plan on the fly. My plan says, once I'm in a trade, to just put my stop loss at the low of the previous candle. That's my 1R risk, and then my profit target at 2R. So it's very cut and dry, and that's what I should do. That's what I did. Unfortunately, I did get stopped out. So now I'm just waiting for the next entry. So now the 1 minute candle made a new high, and you can see I wasn't hovering over it. I didn't want to make that mistake twice. Even though normally it's not an issue if I hover over it, because normally what I do is I just hover over it initially, I look for the high, and then I just remember, okay, 43.41 is what I'm looking for. But again, I made the mistake of not being patient for this thing to do something, either in my trading day by breaking below point A or giving me my entry a little bit later, and I decided to pull up another stock. What I should have done is, once I committed to trading this stock, or at least looking for a trade on this stock, I should have just shut down my screener, because the screener can be a distraction. You're looking at a stock that you're thinking about taking a trade on. It's not really doing anything right now, so you start peeking over at the screener. Before you know it, your entry's been triggered and you missed it, or something else happens. And that's happened a few times, so that's something I really need to work on, is once I commit to a specific stock to day trade, to just shut the screener down and just deal with what I got right in front of me. And either I'm going to take a trade or I'm not, whether the ABCD pattern works out. And in that case, either it'll be no trades for the day, or it could be up to 3 trades for the day, depending on what the price action does. So that's the right way to do it, and that's really the lesson to take away here, for me at least. So now I'm in the trade. This entry was really good. The only thing I did, which I kind of changed after the fact because I didn't feel like it was as true to my plan as it could be, is originally I gave the stop loss a little extra room, which is not really something I do. I generally, if it's a clear reversal, which this is not really a reversal trade, but what I mean is right here, there is a reversal in direction. What this is the ABCD pattern, and this is the pullback. It's just a pretty deep pullback. But this is not a consolidation area. Like, for example, if, let's say, after these three candles right here, this candle broke out above, then this would be a clear consolidation area, and I would put my stop loss below the consolidation area. But here, it's an obvious kind of a parabolic pattern or V pattern, however you want to look at it. And the plan says to place my stop loss at the low of the previous candle. So that's what I ultimately ended up doing. I placed it at 43.07, and then based on my position size, I put that all in the 2R calculator, and that spits out my profit target, which is 44.21. So now there's nothing for me to do. I just let the trade play out. Let's fast forward a little bit. We'll see what happens. I didn't watch this. I walked away, went and made some coffee. I have my phone right next to me, and if it dings, I know to check it, and either I got stopped out or my profit target got hit. And if my profit target got hit, there's really nothing for me to do. And if I got stopped out, then I have to come back quickly and look for the next entry. So that was it. So you saw the profit target got hit there, and it was a nice 2R trade. So because of that first error trade, I'm ending the day up 1R only. Instead, I could have been up 2R, which would have been nice. But nobody trades perfectly. This was a lesson. I could prevent this in the future, again, by shutting down the screener once I decide which stock I'm going to trade, and then just doing my thing that I normally do. I always look for the high of the previous candle. I always have that price in my head of the entry, and then I just watch the price bubble. In this case, I got distracted, and I was looking at the levels of the candles. So that was the error that I made. So anyway, hopefully this helped you. Hopefully you learned something. I know I did. Even though I've done this trade, this strategy now 90 times, I'm still learning things, and that goes to show why the heck do people think, and I get it, I did it too when I started trading, but why do you think that you're going to be able to trade a system, a strategy, a setup, a plan that you've tried a handful of times? You know, look at, in my case, I've been trading about 1.5 years now, and with this specific plan and strategy, I've been trading it for about 2.5 months, and this is my 90th trade, and I'm still making mistakes. So there is absolutely no reason that any new trader should be putting full position size out there when they really have no idea what they're doing and what they're capable of yet. So that's my advice to new traders. And for everyone else, go into every single trade with a plan, stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.